Hello, this is Abhinav and I welcome you. In this video, I am sharing a specific situation where a person is living, doing business in India, and he is planning to obtain a US green card, right? So, what are the points, factors? So, generally, what happens is that many times people whose children go to US, they generally get an option to get a green card for their parents. Now, the parent may be living and that parent may be active, and he has a business or incomes in India, investments in India. So when they look for getting a US green card, basically to facilitate, no restriction on visas and everything, traveling to US and everything, if they kind of have that choice to make, what are the points to consider from a tax point of view? So that is basically what I want to cover in this video. So now, once you get a US green card, then your worldwide income becomes taxable, right? So you live in India, you live in wherever you live, the entire US tax system will start applying to you, right? So then there is no escape, because if you want to escape that system, then there is a complex kind of expatriation process, and expatriation tax may also apply if the assets are above a certain threshold, right? So that is one thing you need to keep in mind, that once you obtain a US green card, you are wedded to the US tax system, which is a very exonerous, what is the, I mean, it's a difficult tax system, right? With a lot of compliances, especially with respect to non-US investments or business interests, right? So that is you need to keep in mind, right? And also the state, at a state level also it will be taxable, whatever the income is there that you earn in India. Now, Indian, from an Indian tax resident, from an Indian perspective, even if you get a US green card, you are living in India, so you are a resident Indian as per the Indian tax law and as per the Indian FEMA law also, right? So understand the difference here. First of all, the residency as per Indian tax law, FEMA law are different, right? So if you, even if you get a US green card, you will be a tax resident of India, right? ROR as per the Indian tax law. If you meet the relevant conditions of the Indian tax law, so the relevant requirements apply. So after US becoming a US green card, you send some money through the LRS route, right? You can send up to USD 2.5 lakhs, and you have some US investments, and then you don't disclose it in India, the Indian black money law will apply, and there's a flat 10 lakh penalty. So you need to keep in mind the obligations under the Indian tax law. Then you are an Indian resident as per FEMA. Even if you get a green card, then whatever are the regulations that are required to be applicable on Indian residents, right? Now, for example, think about a situation where if you send money under the LRS, then fine. There is no restriction. But any other money that gets credited to you outside India, you have an obligation under the FEMA rules to bring it back to India, right? So all that thing you need to keep in mind, that you are still considered a resident as per Indian FEMA law, as per Indian tax law. Those requirements will apply even if you have obtained a US green card, and you're not left Indian citizenship. You continue to be an Indian citizen, so the respective provisions on the applicable to Indian citizens will continue to apply. So please be aware of your tax obligations, FEMA obligations. Now, if you have any employment income in India or a self-employment like a business in India that you run, you can claim in your US. So every year you have to file a US tax return if your income is above a certain threshold, and you can claim if you live and work in India, and you satisfy the conditions of foreign earned income exclusion, which is available up to 1,20,000 per year. Then, if you satisfy those conditions, you can claim those exclusions and the foreign housing deduction, but check the conditions. There are specific conditions around that. Now, on the investment income, so this thing or the foreign income exclusion is only on the employment income, or even I think self-employment also is allowed, right? But not on the investment income. Now, on the investment income, there's a limited relief under the India USDTA. India USDTA has a specific clause where savings, it's known as savings clause, but actually it doesn't save you. It actually harms you. If you are a US resident or a US citizen, is that the US will not allow those certain benefits under the DTA to its citizens and green card holders. So you need to keep that in mind, that not every benefit. Anyways, first of all, this treaty is not a very strong treaty, right? So even the benefits that are there may not be allowed to the US green card holder, right? So that you need to keep in mind. And you can keep the FTC, foreign tax credit, of the tax that is paid on the Indian income on a proportionate basis. That also is available on a proportion. So you are a US green card holder and you earn income in India, maybe rental income or any other income in India, it will be taxed in US. Whatever the tax that you've paid in India, you can only claim a proportionate credit of that income in US, not the full credit, right? Also, the states, certain states like California, as I said in my previous videos, they do not offer the foreign tax credit of tax paid in other jurisdictions. So that you need to keep in mind on the investment income side. F bar form 8938 reporting. So once you become a US green card holder, even you are living in India, you are a US person for the US tax law. So US views any non-US investments, especially pooled investments, suspiciously. So you need to so there are certain requirements around F bar foreign bank account reporting form 8938, which is FATCA reporting. So of your foreign assets means your Indian assets, or in any other jurisdiction, if you have like UAE, you have a property, all that reporting you will need to. So property will not be reported in there, that because they're mostly for the financial things, but you need to take care of those reportings, and there are high penalties associated with not reporting. So that you need to take care. PFIC implications. Now, before becoming a US green card holder, understand the implications of PFIC, right? Reporting as well as the tax implications, right? Best is if you have Indian mutual fund investments. Mutual fund investments do not get claimed under the MTM election, right? So you cannot like even get away with offering unrealized income, right? You have to claim it as a section 1291 fund. So better to sell off the Indian mutual fund investments if you can. Any pooled investments, ETF, if you wish to continue, my advice is even that also you can sell. You can kind of restructure your India if you want. If you're saying that no, I want to keep my India investments, then my request will be at least restructure them. Sell off your pooled investments. Invest, if you want to invest in stocks or bonds, direct investment, so it doesn't qualify for the PFIC tax implications, right? I have made separate video on pre-US immigration. That means an Indian moving abroad, right? What are the tax planning things that you need to take care. That also video you can see, right? So that is the thing. If you are a director partners, now if you have an interest, a business interest in India, right? If you have a kind of a, you are partner director in a company in India, all that is viewed by IRS very suspiciously, right? So you need to do the necessary reportings under form 50, 5471, 8865. Those reportings you need to do to IRS even though you are living in India. But just because you've obtained green card holder, you come in the purview of those US regulations, right? uh, so what basically happens is that an Indian who is having a business in India, who has like a company, who is running some employee, having a team of like 10, 15 people, who is in India doing the business, just by becoming a US green card holder, his compliance cost in terms of the IRS filings, reportings, and even the tax outgo, will have to be, you have to consider those things. Now, any tax-free incomes in India like PPF, NPS, equity shares, up to 1.25 lakhs, you get an exemption. They all will be taxable. NRE FDs, right? No, not NRE. NRE will not apply because the person is a resident. So NRE thing will not apply. But all these tax-free incomes that so you have till now structured your finances in terms of that, these are all the tax-free investments in India. Just by your decision of becoming a US green card holder, all these investments, all this planning will go for a toss. It will all be taxable in US. Income from India business will be taxable in India. Okay, this is very, very important. If you have an Indian business with employees and everything, a fixed place of business in India, the income from that Indian business will be taxable in India. It will also be taxable in US, unless you do some structuring. How you do the structuring is that you kind of move yourself and or your business in outside India. I've made a series of videos on how to move Indian business abroad to legally escape Indian tax, right? So if you move the business completely abroad and ensure that the business in India, the presence in India does not qualify as a permanent establishment as per the India US DTA, then you can escape the India tax. Because the general rule is that if the business is not a it qualifies under the four corners of the PE, then the source country where the business is located, that cannot tax it, right? So you can then claim a benefit under the India US DTA, but again the green card thing has to be seen from that angle. Expatriation tax, if you decided, oh, I made a mistake, now I want to renounce the green card, then there is a expatriation tax provisions that apply, and you can be qualified as a covered expatriate above a certain limit. There is a limit threshold to it. So my overall view here is that you should obtain GC only. So weigh the benefits of obtaining a GC vis-a-vis these whole things, the compliances that will come, the tax output that will happen, right, the reportings that you need to do, right? So ideally you should consider obtaining a GC only if you have a long term plan of moving to US completely, or if you are ready to liquidate your Indian investments and move them to US. Under the LRS you maybe up to US dollars 2.5 lakhs you can move to US, and then maybe you have US children, grandchildren in US for which you want to plan, and then you can invest in US, right? Then that is a good thing. You can go for a GC, or you have a plan to kind of reduce the India exposure by way of either liquidating Indian investments and sending abroad, or doing away with the Indian business, moving your Indian business abroad to maybe US or maybe some UAE jurisdiction you can choose, right? If you have that kind of a plan to reduce the India exposure, right, and maybe moving everything to US, then it's okay. But other than that, if you plan to continue make keep India investments, then please keep all these things in mind, because we want to be compliant in every way. We don't want to like obtain a GC and not do the compliances under IRS and then face the penalties and everything, right? So I hope this video was useful. If you have any comments, feedback, thoughts, do share in the comment section. Thank you so much for watching this video.